Good morning. My name is Miguel Gonzalez, and I'm a retirement specialist with over 20 years of experience helping clients in retirement income planning, overseeing investment of funds, and designing retirement plans. Let's talk about the 5 financial mistakes you should avoid. These simple steps might save you a great deal of money and heartache. We all make mistakes, and through them we learn, but when it comes to your finances, trial and error may not be the most suitable approach for you. Maybe you're making some simple mistakes that can be fixed with a little bit of effort. Your financial professional can help. So here are the 5 financial mistakes to avoid. And avoiding them, as I mentioned, the following financial mistakes might save you a great deal of money and heartache. Number 1, cashing out a retirement account to pay off loans. Substantial income tax penalties can hit you if you tap into your retirement accounts before a certain age. Even if there are no penalties, cashing out an entire account at once potentially puts you in a higher tax bracket. The amounts you withdraw before you reach age 59 and a half are called early or premature distributions. They may be subject to an additional 10% tax. As always, there's some exceptions to the rules, so consult with a qualified financial professional or the Internal Revenue Service. The COVID-19 pandemic forced many people to tap into their retirement accounts to pay for mounting bills and loans. This was a measure of last resort, but the moral of the story is if you have to take a distribution, you should at least understand the tax implications upfront and attempt to mitigate the impact. Financial mistake to avoid number 2 is missing retirement account rollover dates. You can move your wealth around by receiving a check from a qualified retirement account and deposit that money into another retirement account within 60 days, 60. If you miss the deadline, the IRS treats the amount as a taxable distribution. Further, your 401k plan provider withholds 20% for federal income taxes. You have to add funds from other sources equal to the gross distribution to avoid possible tax penalties. The lesson here, roll over your accounts using a trustee-to-trustee transfer whenever possible. Having your custodian send your funds to another directly may be a better way to do a rollover. Mistake number 3 to avoid is failing to update your beneficiaries. Forgetting to remove a former spouse's name as the beneficiary in a retirement account or insurance policy happens. This can result in failing to provide for your children, a new spouse, or other loved ones. Check your beneficiary designations annually. And when a major life transition such as marriage, divorce, or birth occurs, you may want to do it as well. Financial mistake to avoid number 4 is no will. If you do not have a will, when you die, the laws of intestacy determine who receives your assets. Drafting a will helps you maintain control of these important matters. Speak with an attorney to discuss preparing a will that documents where you want your money to go when you're gone. Once you draft a will and name the beneficiaries or guardians, review it every few years and when things in your life change. And financial mistake to avoid number 5 is no power of attorney. A power of attorney, also known as a POA, is an important document that allows you to select a point person, often a spouse or trusted family member, to make decisions on your behalf. This person can access your finances and help with bills, medical expenses, and sign tax returns. If you do not have a power of attorney in place and become incapacitated, your family has to petition the courts for conservatorship. This process often takes months and costs thousands of dollars, and thus compounds the financial pressure. The lesson here is to speak with an attorney to help you select a POA, and while you're at it, discuss a healthcare proxy. Your agent would make medical decisions on your behalf should you be unable to convey your wishes. Your financial professional can help. Ensuring your financial house is in order presents some complicated issues that require professional advice. Find a financial professional who knows how to deal with these types of issues. Find a financial professional who knows the ins and outs of various retirement accounts. Also find a financial professional who accounts for unexpected cash flow crunches, and you want to find a financial professional who understands how emotions can interfere in your investment plans. Finding a financial professional is important, and you want to find someone who understands your goals. Then make an informed decision and have your financial professional build you a customized, tailored financial plan. Once again, this is Miguel Gonzalez with Cortburg Retirement Advisors. Please take a moment to click the like icon, and don't forget to subscribe to my YouTube channel to receive a weekly video podcast every Monday morning. Thank you for watching, and I will see you all next week.